Ready? So good morning and good afternoon. My name is Monica with National MI, and I have a special guest who is also my coworker.
I'm Dr. Stacy Wayman, and I work in our training area. We call it Client Digital Experience because everything we do is on a digital platform.
So she's my special guest. This is her first time coming out and traveling with me. So it's an experience. So thank you for having me, and thank you for the business and the partnership. It's been a minute. Chris, so to you. So today we're just going to go through, it's basically Mortgage 101. I'm here for you. So just ask a bunch of questions. Same thing for those that are virtually. You have the chat box, so please feel free to ask any questions, and then we'll be monitoring the questions in the chat box throughout the presentation here. And today I'm just going to be going over what's, who we are at National MI, and what's Mortgage 101, and what's trending, tips and tricks to kind of protect your pipeline, MI cancellation, and then also when we talk about trends, we're talking about borrower paid single premium, because that's a huge trend that we're going to go really dig into. And then if there's any questions throughout the time we're speaking, please just let us know, and then we'll kind of go from there. So National MI, we are one of your newly approved MI partners, and we are the only MI company that's based out of California. We're based out of Emeryville. Okay. And with National MI, you have me as your account manager. So I'm very hands-on, and any questions that you have, please feel free to call me, text me, email me. I'm on LinkedIn as well if you want to connect too. In regards to that, I'm really here to just kind of show you about National MI and how to navigate by pulling quotes and kind of what's going on. So I know you guys have Encompass, right? And so I don't know how many of you are really pulling quotes from Encompass. Yeah. You are? Okay, so if you're not, we encourage you to use Encompass, because if you are pulling quotes, it's going to save your quotes in the file, and quotes are good for 90 days. So right now, rates can go up or down. And in order to protect that file, you got to make sure you have a quote and it has a unique quote identifier, so that when they go to order it and nothing changes, then, and you didn't have a quote and the interest rate goes, the rate goes up. Well, if you have that quote, we will honor it for 90 days. So it's really important if you can stay in the system and use that LOS system. If not, I get it, because sometimes you're out in the field. And so what's happening is we have our website. It's nationalmi.com, and you can pull a quote where it says get a rate quote. Is it not working?
Here, you want to skip it? If you want to hop over there, I'll move this so I can see.
Okay.
And then we'll.
It's not letting you. There we go. Okay.
Here's just a little person that can.
Want to just put in whatever, so what's going to happen when you log into our website or our phone app? We actually have a phone app that you guys can download, iPhones, Android, and it's going to look just like this. It's going to ask you to just log in your email address one time, and the cookies will save it. And then once you do this one step confirming your information, you hit next, confirm. It's going to send an email confirmation link, and you just have to click it so that you can go ahead and pull quotes, and all the quotes that you pull from our website or your phone app will automatically be saved, so that you can automatically just email it to you, email it to the processor, the underwriter, so that they can upload it in the file. So it's super easy. Okay.
Yeah, we got to authenticate.
Yeah, we got to authenticate all of it.
We got like Fort Knox security.
So, any questions so far? Okay, it's super easy, nationalmi.com. We're just waiting to get logged back in.
Yeah, do you want me to stay here so you can show them more here? Or
Yeah, go in so we can show them like when they do the comparisons too. So when you're going into our website, which is really cool, when you're pulling the quote, it will give you a comparison of conventional and FHA. So you can kind of see if the borrower, if it makes sense to send the file conventional, does it make sense to go with FHA?
That's automatically.
When you pull the quote, yeah. So we're going to show you once we get in there. So I'm trying to we're stalling a little bit here. So that's kind of like, you want to leverage that piece of it. So when you're pulling quotes and what's trending right now is if your DTI, like everything right now, it's all about risk-based pricing, right? All the MI companies have risk-based pricing and it's getting granular. So anytime your DTI goes up or down 5 basis points, rerun your quotes, save them. There's gonna be boxes on there that's gonna show self-employed. Now, make sure, even though you may not know if you're gonna use it or not, just to get a higher quoting purposes, hit self-employed for now, because we don't know if you're gonna use it at the end. What's happening is if you are using the self-employed income, there is going to be a hit. So what we're seeing right now is that you have a self-employed borrower and you're not using that income today, and you're running the quotes coming in lower. It gets to underwriting or processing and they're like, we need that self-employed income. Then the prices go higher, the rate goes higher because we're using the self-employed income. So just make sure that you are truly using that self-employed income accordingly. Does that make sense? Because we're getting a lot of pushback where they're like, we just closed, and why is it, I just disclosed to the borrower this lower rate. Well, they're self-employed and you're using the income, right? They're like, yeah, well, you didn't mark the box. So there's that little box that's trending right now, geographical adjusters. So if you're doing TBDs, today, coming from like LA to Inland Empire, Orange County, wherever, just make sure if you have a TBD and they finally get that address, rerun your quotes, because it can potentially play a pricing impact, if that makes sense. Okay. Yes.
Can you put just a zip code so it can pick up like a city with a TBD?
Yeah, so that's fine to do that, but just recognize though, when you do find a property and it's a different zip code, just rerun it to protect your pricing and quoting for your borrower, because we are seeing those adjusters happening. So DTI, your TBD zip codes, self-employed, just make sure you're just just go ahead and re-pull them just to protect it, and then just save the quotes so that the team has it, because pricing is going up, it's in and out, right? Just like we are seeing today. Okay, so if you haven't gone to our website, this is National MI's website. Phone app is very similar, and it's probably one of the most user-friendly rate quotes out there compared to the other MI companies. And all you're gonna do is put a zip code. What do we have? What's the code? Pick a zip code.
90638.
9068. Single family, primary residence. Go to primary residence, loan purchase, loan amount. Pick a loan amount.
800.
800. Keep that scrolling down, and then the LTV, we'll just put 90 to 95. And 30-year fixed. It's a DU approved eligible loan. Here in low programs, it's important because that one you can put in any type of HFA coverages. You click on that, it will default at Home Ready, Home Possible. The coverage will automatically default to what it needs to be. So we'll just leave it no loan program. DTI without the MI. So remember, when you're pricing out mortgage insurance, it's the DTI without the MI. And this is just for MI qualifying purposes only. Does that make sense? So we'll just say we're at 40%. No, this is not a wholesale loan because you guys are retail. The coverage will automatically default based off the LTV you choose or the loan program, whether it be HFA or Home Ready, Home Possible. Does that make sense? Okay. Borrower paid monthly. So go ahead and click on that product. So these are all the product of MI options. Today, you guys are using predominantly borrower paid monthly, right? Okay, so there's borrower paid monthly, there's lender paid single, and then there's borrower paid non-refundable single. These top three are the ones that we're seeing today that's being utilized. We are going to touch on borrower paid non-refundable single in a few moments, but for now we're just going to use borrower paid monthly. It will always be constant today, right? We don't have to use amortized or anything. Here, number of borrowers. So, you know the fact, right? You have 2 borrowers, you're gonna get better pricing, right? So today we're just gonna put 1 borrower, credit score. What's the average FICO score that you guys are seeing within your borrower customer base? 690. Okay, 690. Okay, so here's that new little field, self-employed. So if you have a self-employed borrower and you don't know, just do a worst case scenario if you're gonna use that self-employed income. You wanna just check it, because then later on, if you're not gonna use it, then you look like you're the superstar because you got them a lower monthly payment, right? So just kind of do from a worst case scenario. So we're not gonna do self-employed. Master policy, their master policy is 02054. So you may want to write that down. So if it doesn't populate your master policy number, you need to put it in. And that master policy number for I-Corp is 02054. And then just hit submit. Purchase.
Something under.
Yeah, because
Purchase.
I didn't choose
Purchase.
if it was a purchase or.
Yeah, there you go.
did select that.
And then,
We don't need anything on
Hit
the
submit.
program.
Yeah.
So it should be good.
okay. So here's your identifier up in the top right-hand corner. It says ML90B. So that is gonna be your rate quote. So something let's say nothing happens to this file and it goes to underwriting and they're ready to order the MI certificate and nothing changed on your file. If it went up, they'll put that rate quote and we will honor that pricing for 90 days. Okay, and then this is just kind of gonna tell you all the scenarios and learn characteristics of your file. And if you scroll down, this is where you're gonna do the pricing comparison. So it's gonna give you the difference between monthly and FHA. Obviously, going conventional is gonna give you a better deal than the FHA from a monthly MIP perspective. So you have that you can compare. We will also look at that on a borrow paid single premium as well. So when we get into that, you can kind of see all that. Any questions so far? It's pretty self-explanatory. It's super easy because I know with other MI companies, you have like a couple of pages that you have to kind of fill out and it's a little bit more detailed. This is just super user friendly.
I don't have a question when it comes to the actual the rate. I know there's a few factors that take in consideration, especially the DTI is a factor, a consideration factor.
So what I mentioned earlier is any so there's tiers. So what I can say is if your DTI without the MI is at 45.01, that's where it's going to have a big increase. It's going to push it over. Also, there's tiers. So if your DTI without the MI is at 30, you know, and you, let's say, quote it out with the MI at 32, then it's going to price it up. So it's those little buckets, 29 to 30.01, 40.01 will push it over, 30.01 will push it over. So just know that anytime your DTI changes, just rerun it, especially when it's those thresholds. And same thing with income. If you have a borrower that has additional income and you're just like, I don't know if I really want to use all this additional income because I don't want to get the documents, but you know that that threshold of DTI is higher, you may want to add that extra income just to bring it down so that you can get a better MI pricing. Does that make sense? Yeah. So I'm telling you, everything's getting so much granular. So just be cautious.
It really underscores why you do the quote without mortgage insurance in that DTI.
Correct.
To keep that as low as you can keep it.
Yeah. So those are kind of like the tips and tricks around, you know, protecting your customer and, you know, the pricing and so forth. Anything else?
Does the comparison also come out in Encompass?
No. No. So Encompass is just once you do this is kind of like if you're out in the field or you're just trying to figure it, you can utilize this. This is a tool for you guys to play around and utilize. You can save the quotes. If you save the quote, test one, whatever, you will have the ability to email it to yourself, even from the phone app. You pull a quote, you can email the quotes to you so that you can refer. And then what will happen is it's kind of covering that side of it, but on your right-hand side, it will list all the quotes that you ran so that you can go back in there and see the comparisons of the pricing. And then down here is where on the bottom, it has a PDF You can email it to yourself, print it out. So that's where you have the ability to do that.
So basically going back to the DTI question.
Mhm.
I mean, something will qualify the bar, but it's something is especially when it comes to overtime, right?
Mhm.
And like my income was different from what I quit. And then that quote doesn't, it's no longer valid, correct?
It's not valid. That's why you want to keep on rerunning your quotes. Just because let's say you finally, because you don't know what income you're gonna be using, right? You're gonna say with or without it, so you can run both scenarios, so you have it. And then, by the time it gets to underwriting, and let's say you're gonna go with it, with the additional income, right? Let's say the MI pricing goes up. Well, you have a quote already and nothing changed from this time because you're using the additional overtime income. It's gonna protect you with that lower pricing.
Okay.
Does that make sense?
makes sense.
Yeah, so it's always important, pull your quotes and save your quotes. Hold on to them and put, enter them into the system. Any questions? Chris? I'm good, okay.
So quotes just like the rate that is increasing so often, like.
Yeah, so it's just like interest rates, like everything is so, the market is, especially right now, the market is so volatile right now that everything right now, from an MI perspective, all your loan characteristics, so everything that an MI company asks for is going to affect your MI pricing. That little checkbox, some MI companies have first-time home buyers, your home, those are gonna be impacted with pricing. So any questions or any little boxes that the MI company is asking for is going to dictate your MI price. Yeah, so anything else? We're good? Anything you want to add? We're good? Okay, and just you can download the phone app, Android and iPhone. We have it, and again, it mirrors the exact same thing. So next, do we have any questions in the chat?
Didn't see any numbers there, so no.
Okay, so the next thing that we're going to talk about is borrow paid single premium and how to utilize that. Has anyone used borrow paid single premium? And how have you used borrow paid single premium?
When my LTV is like almost 80%, like at 83, 84, I'll do the single premium so that they don't have that in their monthly payment. It ends up being like a couple $1,000s.
Okay, and so when you do that setup, that borrow paid single premium, is the borrower doing this one lump sum?
Yes,
Okay.
they'll bring it in
Okay.
as part of their closing costs.
And you've done the same, Chris, same way, okay. So there's multiple ways you can use borrow paid single premium. So as we know it today, is the borrower can come in and just do a lump sum. Well, because the way the market is today, now with seller contributions, and now you're starting to see seller credit, right? They're offering that purchase prices, let them keep the purchase price as is, have the seller come in and do a contribution, because now you can use third-party contributions to pay the borrow paid single premium. So let's go ahead and run a new quote and we'll do borrow paid single premium.
Was that zip code again?
90638.
Single family, primary residence, loan purpose, purchase, loan amount, we want 800,000 again, okay. LTV, we want 95, actually go down to 90, do 8590.
Okay.
And then do you approve eligible, loan program, DTI without the MI, we'll do 40. So then that automatically drops the coverage down to 25%. We're gonna do borrow paid, single premium, non-refundable. One borrower, and what FICO?
We did 690 last time.
Let's do 740. And then hit submit. Okay, so go ahead and scroll down a little bit. Again, we're using an $800,000 loan amount,
I was
right?
just gonna say,
So-
our average loan amount, I was gonna change the loan amount, the
Let's do
average
it.
loan amount is 450,000, I think
Okay,
that's a little bit more realistic.
Let's do that then.
$1,000 loan.
Okay, 450.
All right. Anything else you want to change, Chris?
No, I think that's fair.
Okay,
All right.
$5,000.
Even prettier.
Yeah, it's $8,000. Okay, so this is a flyer that I have, so this is a reminder for you guys. You guys all have it, and if you turn the page over, it kind of breaks it down for you. So when you do borrow paid single premium, the borrower comes in, they're gonna pay $5,000.40 and pay one lump sum. There's no monthly MI. It's gonna help with your DTI, right? Because if you're struggling with a DTI issue, use a borrow paid single premium because there's no monthly MI and it's gonna drop it down, right? Okay, when it comes down to the seller contributions, you can use seller contributions to pay out the MI. So if your borrower, your seller is like, okay, $3,000, great. Then you can use the $3,000 to pay down the $5,000. The borrower has $2,000 left. They can either do a lump sum and come in with the $2,000, or you can do a lender credit if you're allowed to, or you can finance the MI. Think of it kind of like an FHA, right? You can finance that $2,000. We don't care how you structure it. You can do $1,000 out of pocket from the borrower, $3,000 from seller contributions, $1,000 finance. As long as you have the investors that will allow you to do that, we don't care as long as we get paid. And that's how you're going to fluctuate, because if appraisals are coming in, borrowers wants to come in and say, I want to do 20% down, 20% down. Talk them out of it. Tell them we'll do 15% down, right? Their interest rate is going to be lower because it has mortgage insurance on it. And at that point, hey, it's going to cost you $5,000 on a single premium. Why don't we, do some seller contributions? You pay $1,000 out of pocket or finance the rest. Okay. Questions so far? Because I'm going to go into financing it and how that works. Any
Let's
questions
just
on it?
check our galley, and then they're all good.
Okay, so when we talk about financing it, the way it's gonna work is if your loan amount is really at 90, or LTV is at 90% or below, and if you really have a FICO of like 740 and above, that's when you always want to make sure you compare and do a borrow paid single premium comparison. Because when you are pricing out the MI, you're going to use a 90. So in this case, we're using a 90% LTV. Your mortgage insurance, your MI, will be based off of 90 LTV. Okay, so that's going to give us $5,000. And at that point, you're going to, let's say you do the full lump sum of $5,000, you're going to finance it. You're going to finance it into your loan amount. But keep in mind, now your LTV might jump up to 92%. That means your interest rate is going to slightly go up. The rule is you do not want to go over 95% LTV with financing the MI, because now you're going to have LLPAs. And it doesn't make sense to do that. And from an investor standpoint, think you're max at 95 when you're financing the MI into the loan. So right now, this is a hot topic because we're seeing the seller contributions coming in. The borrowers are like, I don't want to pay all this money. My mortgage payment's already going up because of the interest rate. Well, guess what? Why don't we do it this way? We save you some money. We try to get your lower interest rate, and then have the money for an emergency fund, money for home improvements, or to buy furniture. So it's one extra step to kind of be creative in today's market. Does that make sense?
You can do the comparison,
Yeah, so
which is gonna cost them in 5 years.
correct. And this is really a good tool when you're trying to sit down. I know for a fact when you're 716 above, it's always probably going to be a 90% and below. You're probably going to be single premium. When you're at 740 and below FICOs, this is really good to compare so that you can see if this makes sense. Because we're doing what, a 740 or 760?
We did 740.
It's 740. Okay, so we're still doing better going borrow paid single premium versus going monthly. I'm just letting you guys ponder for a minute.
It's really also a creative way for those folks who think that they can't be homeowners. There's just like no way to do it, but you can get creative with some things like this and put them at ease.
Yeah. And so you all have the flyer on your chair to help remind you of the different ways to utilize the borrow paid single. Now, but when it comes to borrow paid single premium, there's refundable and then there's non-refundable, okay? Right, what we're talking about is non-refundable, and it's going to be better priced for the borrowers. Okay, 99% of the time, everyone's using borrow paid, single premium, non-refundable. The refundable, I've only maybe seen it twice where it was like someone wasn't gonna stay in the home for that long, and so they just wanted her to buy something and they're gonna plan to move in the next year or two. They pay that higher premium in order to get the deal done because they had a tight DTI. And so that was the way it worked for them to get that home. The other reason was, as an FYI, when you do the non-refundable, it does affect your points and fees. So sometimes you have to go refundable, so it offsets it if you're trying to overlook the points and fees threshold if you're hitting that mark. So those are the times I've seen it. And if they do single premium refundable, there is a chart where if they refinance or they sell their house, they get a refund back. It's prorated. And so we have that on our website. Just email me when you come across that. I'm not gonna, because all it is how long they've had it, how much did they pay into it, and then they get a percentage back. Okay, but again, this is the 99% of the time, non-refundable is the way to go. Any questions? Are you sure? Do you guys want to do more examples, or are you guys good? You tell me.
We don't suggest the single if their FICO's below 740.
Well, this one's actually 740. That's where I was like,
Below.
oh, but let's rerun one. So you want to do 700?
Why don't you do this 690?
690,
690.
that was what they said was a standard or typical score. Let's put it in, there we go. Okay, anything else we want to change?
No.
All right, here we go.
But actually still doing okay.
It's a little bit, it's actually a bigger savings between the two over the 5-year total, between the single non-refundable and the monthly. It's actually a bigger savings than the previous quote, but it's still a bigger investment.
Yeah. Interesting, right? Yeah, so it's like, it's good because you're still trying to keep money. You're helping your borrower still keep money in their own pocket, and that they can, have that emergency fund. They have that ability to do some remodeling, because a lot of the homes, may need remodeling. So just you can even do 18%, down versus 15, you know what I mean? It's up to you, but at least they're in that 15% mark. To get that lower interest rate, because the interest rates are where we're at today, anything is gonna help. So always push that. Yeah. Any questions? Okay, I'm going to jump into our training really quick, because now we're gonna talk about arms and buy downs. With arms and buy downs, that's trending. Are you guys hearing about arms and buy downs? Are you guys originating arms and buy downs yet, or?
The arms are not necessarily
Price?
cost effective. Yeah, they're not priced out yet because we're not.
Kind of
The
picking
new,
up
the
difference.
new, the new index that arms are tied to
It's over.
is new,
Right.
right? So for those of you that are
How are you?
been doing loans a long time, they've changed the indexes that are used on the arm loans, and
Yes,
so they market for that yet. So until I see the rates leveling off,
Right.
or
I do.
be a change for the arms being.
Right, so just
Price,
know
right.
that your credit unions, like, I don't know who you guys are, your main competitors are today, but I would say credit unions right now, because they can portfolio their own loans, they're really pushing
Yes.
arm loans. And so, like Chris, you mentioned that whole pricing point. I would say once it starts leveling off, I hear that maybe like a 7 or 10 is really where it's gonna make difference on the arms. So
Right. So is that what that is? Is that mean if he's Schedule E, if he has like rental?
Hi, Ivan. Did you have a
Ivan.
question?
Ivan, we can hear you, bud. Why don't you
Yes, I think I can mute him.
Okay, so when you go to our web,
So much power.
I know, right? So Dr. Stacy is going to take us to the training models and show you where you can do additional training on arms when you're ready. And then there's also buy downs, and it talks about the difference between LIBOR and SOFR and everything else.
So I'm gonna take you to my house. This is where I live. Have any of you joined any of our live webinars yet? So every month we have usually between 5 and 8 live webinars. And we get our topics for those webinars based on what you all in the field are telling us is happening with you and what's important to you. One of the key things that we learned about was that arms and buy downs were becoming more prevalent, and there were a whole lot of us who had not ever originated one of those suckers, or it had been a really long time ago since we've done one. So we had folks that were saying, I just don't understand them. So we created on our training page, you go to nationalmi.com, click on training, and you can go to our training catalog. There we go. Just below where you can see some information or do log in for our e-learning or request access for the e-learning, we have 2 new libraries. The ARMS library is 7 modules, and these are micro learnings. They're like 2 to 6 minutes. So it's not going to take you a ton of time to go through. And we actually broke them down into modules where you can pick and choose what it is you want a refresher on. So if you've never done anything with ARMS, you might want to watch the whole kit and caboodle. We even cover how National MI handles underwriting premiums for these types of loans. So we go through everything from what the heck is an adjustable rate mortgage? What's an ARM? Are you talking about this? No, we're not talking about that, right? All the way through the things that you need to know about ARMS, including how we can help support you with an ARM product. So you might decide you want to watch all of these, all 7 modules, or you may just want to watch the things that you need a refresher on. And like I said, they're 2 to 6 minutes, super quick, packed full of information. And you guys want to see one? You want to watch one?
We can do the intro of it, and then we'll jump into the buy downs.
All right. Let's see if it'll let us in there. There we go. All right. Oh, you got to be kidding me.
You have to register for yourself.
Yeah. Well, that's because I'm not already. I
I
was
know.
excited.
I
So
know.
I'll show up on the report and they'll be like, what are you doing? All right.
Welcome to the National MI Adjustable Rate Mortgage or ARMS Library. I'm Dr. Stacy Wayman with your National MI Client Digital Experience team, and I'm here to get us started with Module 1 of our ARMS Library. What is an adjustable rate mortgage or ARM? Let's get started. Before your borrower decides which home to purchase, you should explore which mortgage program will work best for their financial.
So this is the style of both libraries where it's constantly moving, but it's bringing you all that information. You've got closed caption. So if you need to pause anything, jot some notes down, you can do that. You can go back, rewind, rewatch, whatever you need to do. So we did both. We did the ARMS library and the buy downs library. The buy downs library is 6 modules, but same thing, starts from what is a buy down to how does National MI support you in those premiums for those products. And you can do the same thing there, watch all of them or just refresh yourself where you need to. The other good thing is that you have our solution center. So if you're looking at a product like this and you have questions, you can always call in and talk with someone live to get some help and support. Do you want me to keep with
Do
training?
you want to go more into buy downs or
Yes.
yes? Okay, we'll jump into buy downs. Yes.
I just had a quick question. I have a buy down now, but they're doing 20% down, so they don't need MI.
Okay.
However, if they do less than that, is the rate different for that kind of program?
Yeah, there's going to be
It is.
traditionally a fix, but then you get to automatically adjust it from 3, 2, 1, or 3, 2, 1 buy down.
2-1.
Or 2, 1, so then you would adjust it that way. When you do the buy down, so coding wise, they would just do 30-year fix.
Mhm.
And then what will happen from the ordering standpoint, they will have to upload the file, let us know manually for right now, because we are trying to get that ETA fix on the back end to update the MI certificate with the buy down information. We will go behind the scenes and do it manually. But for you, it's super easy. Go with the quoting and just do a 30-year fix, and then you can just adjust the 2-1 interest rate or MI rate, interest rate rate.
Mhm.
Does that make sense? No? You want to rephrase?
So there is a difference, but you still start the same way you did with your quote. Then once you have that quote, and you send the file up, I think the best thing to do really is call Solution Center and say, hey, I've got this file. I did a 30-year fix. It's gonna be a 2-1. What else do you need from me? They're gonna gather some information from you, and then they'll make the change on the backside in order to make sure. And they'll let you know while you're on the phone if there's a change to your pricing.
But from an LO perspective, they're just pulling quotes.
Yeah, just
Yeah.
still just do it as the 30-year fix, because at that point, when you're just quoting and you're kind of ballparking and saying, okay, let's talk about this, you're not 100% at that point that it's gonna be a 2-1, or if that's even the best option for them. Because as you saw, it could be something like a different type of MI that makes the difference for them versus if they're gonna do a 2-1. Now, in your case, you've got an 80%
Yeah.
2-1, so there's not even MI there, but you may want to run a quote like those scenarios that we ran at 85, 90%, something like that, where to see what it does. And if maybe that's a better option for them, even as a 2-1, maybe that's a better option for them than going 80%, bringing that 20% down.
Okay. And by calling, you'll let us know like if the pricing changes?
Yeah, they do that while you're on the phone at Solution Center. So if you like, you have to put in the original file.
Mhm.
And then if you don't have that option to plug in Encompass, you can.
Encompass, so what I would do, if you're doing a buy down, stay in your system.
Yeah.
Yeah.
So rather than use our website to do the quote, go in and Encompass and do that quote, because yeah, but in Encompass, it will ask you to put like the starting rate, the type of buy down it is, so you can put all those parameters in there and get more accurate pricing.
Yeah.
If you're in the field and you're using our website to do a ballpark quote, stick with that. But then as soon as you determine that it's going to be a buy down, then that's when you'll want to call in and say, hey, I've got this certificate, and now it's going to be a 2-1 buy down, and we need to make some changes. Our Solution Center will walk you through those changes.
Just to clarify, you're asking about the rate for the mortgage, not the rate for the loan, correct?
For them,
Yeah, okay.
for the MI.
So, yeah, just pull a quote, 30-year fixed, and then when you need to work it in your system, rework it, stay in your system and work it. Because if you're gonna get more accuracy doing it that way in your system, because it's not breaking it out for you, right? All you're gonna do is a 30-year fix, and that's the MI for it. Does that make sense? Or, right? Okay. I know, sorry, we're kind of.
Well, I don't want to speak out of turn to say it's not drastically different between the 2-1 and the.
Yeah, it's just, we're not set up completely yet on our website they're working on it behind the scenes, where you can do the buy down. So today, you just do a 30-year fix, whatever you're doing, but if you're doing buy downs today, just stay in your system because it will pull it up that way. And if you get an error message, you just email me and we'll connect you to Solution Center if we have issues. But all that's supposed to be fixed in the next month, the 2 months from what I was told.
Yeah, buy downs are it's a little new for us as well. So,
Yeah, because we've done it before, but we had to manually do it. But now that it's trending, they're trying to fix our system to hurry up and get it done. So it's an easier process versus us manually doing it on the back end. That makes sense.
So your buy downs, you have the 6 modules, also micro learnings. And it starts out with the types of buy down programs, and then we stick with a permanent buy down or temporary buy down. We even give you stuff about move this over here. Calculating temporary buy downs. So you've got the modules for that library in here as well. Same thing, 2 to 6 minute micro learnings. You can whip right through them, but they're here for you all the time. So if you're setting up an appointment and you're thinking that you're going to talk with somebody about an ARM or a buy down, and you want to brush up ahead of the appointment, this is a great way to get yourselves ready for that.
Yeah.
They can be a little tricky, and it's a lot of times they're I shouldn't say they're tricky, they're just a little more complicated, obviously, than the standard loan, right? There are a few more things you have to think about, but being able to explain that to a client, you can use the language that's here to help them understand. You can even pull these up and show them the video if you want to show them explain to them what an ARM is and help them understand. So.
What, we're good? Okay. And then if we want to go to the other training, like features of the month. So if you should, if I don't have your contact information, you can always email me and have me add your contact information into our database, because once a month, there will be a calendar of all the trainings that we have available. So it will be, like we'll have self-employed training, we have all of that, whether it be advanced or non-advanced. We have Dr. Bruce Lund, if you want to talk about those trainings.
So I'm super stoked about what we've got coming in 2023, because 2022 was a really good year. We have a really large stable of presenters. So one thing that we're doing that starts in January is a 4-part series on leveraging LinkedIn as a mortgage professional. And we have this person, Brynn Tillman, who's dubbed the LinkedIn Whisperer. She's genius, but she can really help you with how you market in your business. We also do a leadership training series with Andrew Oxley, which is super great. Even if you're not already a leader, but you're thinking at some point you want to lead your own team, it's a great way for you just to get that executive presence, and all those trainings are right there. Dr. Bruce Lund does sales training, and Rebecca Lorenz from Ninja Selling does sales training. So they have totally different programs that they teach about, but they can give you some great insights for things that you might inject into your business to boost your productivity. We have Julie Hansen, who is she's a former actor and salesperson, but she is a guru when it comes to how to present on video. She's fantastic. So if you are meeting with clients on video, or maybe you're meeting with a referral partner on video, you can get into a realtor monthly meeting, but they won't let you come in the building. You got to do it virtual. She can help you with those pointers on how to have a stellar presentation and get the most out of it every single time. We have folks like Kendra Lee, she'll do topics like time management, how to boost some like email hacks or voicemail hacks to get return messages and get interaction. We've had Jen Powers in the past, who's done a variety of different things. We're just finishing up a series on emotional intelligence, which is just really cool. And we have folks like Kristen Messerly, who is just immersed in our industry and does a lot of research and data collection on what's prevalent in the industry. So every year we sponsor a next gen homebuyer report that she puts out, and she brings some great data and statistics for that. So it's always worth it to be in one of those webinars with her. We also have Fannie Mae and Freddie Mac come in and do, we'll have like a one on appraisals. They're doing affordable housing. And they share all their, all the products and services they have. And I'm telling you, they bring such great data that really teaches us where our industry is headed and what our future home buyer demographic is going to look like. It's just incredible the amount of information they have.
Want to show them the calendar real quick?
Sure.
And then lastly, I'll just go into MI cancellation if there's no other questions.
Come on, baby, you can do it. There we go. So when you come into our calendar, and you can get from that page we were at, or when you go to training, you can actually just click on the calendar. You can change the month to see what's out there. But whenever we have a webinar available, the date's going to have a box around it. And
we're already at the end of October, obviously, so we'll go into November.
Yeah, I was hoping that we could see. There it is. It's below. So depending on how your screen is set up, whatever date you click on that's highlighted, it will show you what's happening on that day. So if we go then to November, and we plan a quarter ahead. So we have events planned for the entire rest of the year. If you go to like the 3rd, you'll see that's Marianne Collins. And so Marianne Collins does a 5-part income calculation series, starting with basic underwriting of the self-employed borrower, advanced, Then she does some case studies in there. She does conventional income analysis, and she does P&L and balance sheet review. Super, super helpful. Her sessions are a little longer. They're about 90 minutes, but she's an incredible expert in the industry. She's been in the industry for a long time, and she has a lot of knowledge and super helpful to get brushed up on those things.
And what I do want to kind of stress too is that there's, as you go and you figure out there's classes that you want, register. I encourage you to register for the classes, and even if you can't make it, you registered, you'll be able to get the recordings. So that's what's good with us, because sometimes you can't get recordings and all of that, even if you didn't attend. So at least with us, as long as you registered, you will get the recordings.
Another thing that we encourage LOs to do is if you have realtor partners that you think it could be really helpful for them, for example, to be on that next gen home buyer report with Kristen Messerly, or maybe some of the stuff that comes from Fannie or Freddie, invite them to attend these webinars. Maybe make it a part of a lunch or something with them, but invite them to attend. These are the webinars, the live webinars are open to anybody in the industry, right? Anybody at all. The recordings, however, are yours. That's something specific that we do for our master policy clients. We keep them in an e-learning platform where you can access them. But you could invite those folks to attend these, and it's another value add that you're giving them by helping to educate them and their teams about what's happening in the industry.
And we're always open with feedback. So as you take these classes, or if you're hearing some trends out in the market, you know, as you're out there, you're just like, well, do you have training for this? Email me and let me know, and then I will default it over to Stacy to see if we have it. If not, can she create something, or can we have a speaker or something? All of this has been kind of brought on by our customers. So, any questions on the trainings? Okay, lastly, it's the MI cancellation. So how many of you guys, do you guys know how the MI cancellation works with mortgage insurance? So the MI companies do not dictate the MI cancellation. It's the servicing company. So when you're trying to figure out, like, you know, so let me rephrase this for a minute. When you look at when you're doing a borrower paid monthly, and if the borrowers are not making extra payments, and you look at their, you know, the loan analysis, and it says, okay, after so many payments, after something like 7 to 10 years, at 78% LTV, it will automatically drop off. Okay, that's based off that's the rule. However, if the borrowers are making extra payments, or if they are doing home improvements to help build that, it's not up to the MI companies, it's up to the servicing companies. And so sometimes there could be waiting periods. So I did send the flyer out to have them email you guys. I have a flyer, it's the MI cancellation, and it goes down in the second page where it actually tells you how many years. The borrower can request the MI cancellation at 75% or less if they're within a 2 to 5 elapsed origination period. So this is a great tool to hold on to, because when you get those questions, well, how long can the MI cancellation drop, or how long is the waiting period? It's not up to the MI company, it's up to the servicing company. And it tells you a guide of how many years and what LTV you need to be at in order for that MI to drop off early. Does that make sense? Yeah. Okay. Any other questions? We will be here. Lunch is going to be served. I don't know if it's here or not already, but it's coming between like now and 12. So we will be around to answer any questions and to check in. So we appreciate your guys' time. Thank you all. That's remote as well. We're good.
Thank you.
You're welcome.
Are you guys okay for me to ask you a question?
Yeah, sure.
Yeah.
If you had one thing that you said, okay, I feel like we could use a training on this, what would it be?
I think having your, what they were talking about for the sale, people helping people in sales, I know that's not necessarily,
Yeah.
that's open to the public.
Yeah.
But I think that if Hyle, which is the one that kind of handles our trainings here, I think we should coordinate with Hyle to have all of our loan officers come on and just hear two different perspectives, like you mentioned, maybe have one training with one of them and training with another one. I think right now, a lot of people are concerned with where the rates are and
Yeah.
kind of panicking, and when you panic without swimming, then you just drown. So I think being able to look at different perspectives of how to generate business might be a great opportunity.
For overcoming that fear and.
Awesome. So Dr. Bruce is every month, Rebecca Lorenz is every single month. We have both of them. One exception is going to be November because we do give them a day off every once in a while. However, Dr. Bruce won't be in November. He'll be December. Rebecca will be in November. But if you connect with Monica, she can make sure that you're getting those automated. It's a once a month. We're not going to spam the crap out of you. I promise.
What I can do.
But
is
you
I
get
can-
that. Yeah, and you can, as she said, you can sign up for them. Most of them happen on West Coast time, either 10 o'clock in the morning or 11 o'clock in the morning. They're usually 60-minute presentations. And if by chance something happens, you get called away because you have access to the recordings, you can just reach out to my team. We'll get you the access and you can go in and watch it at your leisure. But I think that's a great idea for us to maybe get the specific dates and links to your coordinator and have that done as like a group
Yeah.
event. I think it could be a lot of fun too. You guys might,
Yeah.
you know.
Thank you. I'm sorry, it was like, I'm trying to like get you on here too, so. All right, thank you very much.
Thank you.
The MSA cancellation. Yeah.